Good morning. This is Ron Brown. It's Saturday morning, April 26, 2025. This week I'm going to do my market analysis and I'm just going to use ETFs. As always, the market is your teacher, and you'll see that you can understand a great deal about the markets just by looking at the ETFs. So here's the standard risk disclaimer. You can read it if you like, but any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Now, the primary view that I'm using for this presentation is located under the category Trades End of Day Relative Strength, and there are two folders in here. This folder is End of Day Information, the relative strength to the S&P sectors, and these sectors are made up of the individual stocks provided by Standard & Poor. The next folder are some specialized end-of-day relative strength, and the one I'm going to use here is end-of-day relative strength to market insight ETFs. Now, these are a bunch of ETFs that I've put together in a folder in my market analysis user groups, and it just gives me a quick read on what's going on in the market. Now, you can see the sort is on the raw combo, which is a percentage price change one day, and range. So the strongest stocks, which closed up in the upper part of their range, are going to be at the top of the list. And you can see consumer discretionary stocks, XLY, are at the top of the list as of yesterday. This is followed by the S&P XOP, the SPY, the QQQ. So if you look over here, you can see that it was another good day for the markets. These markets are all over the place. The problem is there's really no stability to these markets. Yes, there have been several up days, and the up day on Wednesday was a buy signal, but how long that's going to last, nobody knows. You can see looking at this column that there was weakness in some of these ETFs, the ones that are in the red, and the ones that closed in the lower part or mid-range to lower part of their range. Now, most of them closed yellow in the mid part of the range, so the close was actually pretty strong just based upon the percentage range. But notice that the volume was relatively light for most of these. Now, what I did on this particular view only, if you scroll all the way to the right, you can see I put another name column in here so these could be identified with the symbol, because I didn't want to look clear back over here to the left side. And what I did is I put the percentage price change for 1 day, beginning of the week, 5 day, 10 day, 15 day, 21 day, and beginning of the year over here on the right hand side of this view. The reason I want to do this is because it really puts things in perspective. Yes, we had a nice several days here in the QQQ, for example, from, let's say, 1 day changes 1.1%, beginning of the week, which would be Monday morning, up 7.8 from last Friday's close, 6.4, 10 day 5.9, and 15 day 4.9. But as I look to the right, I can see it's still down 7.6% from the beginning of the year, which really is not bad considering what the market's been through. It's only down 2.4% for 21 days. So let's look at the QQQ. I'll bring it up. This is a daily chart of the QQQ. Just make it full screen so we can see it, and you can see how abnormal this market has been. This is where Trump said he was putting a 90-day pause on, and I'm sure he loaded up, and all of his friends made a lot of money that day. But you can see what's happened. It's chopped around since then. It finally surpassed this. I'll put a crosshair on here. Surpassed the high of that on yesterday. So it looks like it could be moving up. You could consider this to be, let me draw a line on here. I should have made this yellow. You could consider that to be a W formation, which is a powerful formation, but you can see that the volume has been falling off here over the past couple of days. So it looks pretty strong right now, but like I said, we just don't know because of all the uncertainty out there and the tariffs. It can change in a heartbeat. Now this is approximately the beginning of the year here. Let's see, 1, 2. Go back here, and if I do an alternate A and bring this up, let's see if this what this translates to. Draw it over here and look down here. Minus 7.5. My drawing is not as precise as Matt's calculation. I think it said it's down 7.8% since the beginning of the year. But from the high here, we're down about 12.5% over the last 46 days. And for those with large portfolios, that's a pretty good bite. Let's just take it from the high here down to the low. At that point, it was down 25.6%. So clearly in a bear market at this point. But it's recovered nicely, although it did it haltingly, to say the least, and it's creating a lot of nerves for market participants. I should say nervousness. Okay, I'm going to minimize this, and let's take a look at some of these other things. You can see the VIX, the Ultra VIX, has fallen considerably. At the beginning of the year, it's up 42.3% since the beginning of the year, though, and this last week or the last day was down 5.5, and over a 5-day period down 16.8. So, as you all know, the VIX is going to come down as strength comes back into the market. Now, looking down at this chart, let's see, this day here was the 7th of April, and we're currently at the 26th, so approximately, let's say, where have we been? Where's the strength been the past 15 days? Bitcoin has been going up. Semiconductors have moved up a lot off their low. Let me bring this up. I guess I'm already in semiconductors here. And you can see that this has really been choppy and nerve-wracking. But, for traders in and out, they like this volatility, especially if they're day traders. So we know we're seeing strength in the semiconductors, and this is the SOXX. So the S&P index, which contains all of these SOX stocks, is the technology sector, and that's the XLK. So what I'm going to do here is go to the S&P sectors, and we're going to look at the XLK. And you can see that when I sort on raw combo, that PLTR comes to the top. This is a very popular stock right now. Look at this. It got clear down to, let's see, what is that? 66.65 was the open on this day, and it's nearly doubled since then. The VPA flags are stopping volume, and strength seen returning. Then here is a negative VPA, but then here's an effort to rise with strength seen returning. There were no VPA flags until yesterday right here, but this stock has been moving up nicely. Now looking here, you can see the volume yesterday was above average, spread above average, closed very high, and sentiment bullish. This would be a Wyckoff buy, obviously, with above average, and very high. The place to get in was back here. Now I'm going to quickly drop down to my number 2 chart, make it full screen, and you can see the buy on the 3-6 crossover was clear back here on that effort to rise with strength coming in, and it dipped down here, but it didn't go below it. And then the short-term trend confirmation, and then the intermediate-term trend confirmation. It came in here. The VPOC turned positive on this day also, along with a volume pocket pivot. So a lot of buy signals on this stock on that day. Another thing, the fan uptrend, if you look over here to the left, is up. It's got an RS rank of 99, 98, and 99. So this is clearly a leader in the market now. A little bit late to chase, but it could continue a lot higher. Just like Netflix. Earnings came out, and this is a 52-week high. Let's do a monthly on it. All-time high, it looks like, on the monthly chart. I just hit my alternate M key to change this to monthly. So these stocks, which become favorites when the institutions are buying, look at all these volume pocket pivots down here, can continue to go higher. It's pretty extreme right now, this move, but here was a move right here on the crossover, the 3-6 crossover, with a volume pocket pivot and a volume point of control signal on the same day. Now these are coming up in scans on the 3-6 crossover and volume pocket pivot and VPOC. All three of those would have triggered on that day. So I'm going to minimize this. And anyway, that's just a quick way, after looking at the market insight view, sorting on the raw combo, you can quickly drop down to the individual sectors and see where the strength was or is within those sectors. You also have the option of going to the full S&P 500 by clicking on that. You can see that PLTR comes to the top here also, and then followed by Charter, AXON, Lilly. Or you can go down to the next folder, the end-of-day relative strength to the NASDAQ 100 stocks. Charter's on top, followed by PLTR. And here's Tesla. Some more hype came out this week about the robo-taxis being in the near future. I'll believe it when I see it. But anyway, it doesn't take much to get a stock rumor started and then people piling in, and that's what happened on Tesla yesterday. Bring it up. Look at the volume pocket pivots here. Strength seen returning, volume pocket pivots these 2 days, and then volume pocket pivot here with an effort to rise, and the 3 cross the 6 on this day right here. But the first indications of volume coming in are these blue bars, over which are an overlay to the volume bars. But it's just a quick way to see where the strength is. Now I'm going to stay in the QQQ here, and I'm just going to tile ranking on warehouse module. It moves the warehouse module down to the bottom, and this is on Wilder 14-week relative strength. I pointed this out last week. I like to do this to see where the real strength is based upon Wilder 14 weeks. And let's bring a few charts up here. And I'm going to go to a weekly chart and just drop down one at a time. Well, let me redo this. Here's EXC. Move it over here so we can see it better. That's a weekly chart based upon the Wilder. Here is Monster Beverage, American Electric Power, Vertex, Take-Two, Coca-Cola, so you can see how strong these are in a weekly chart. And as we move down the list, of course, they aren't strong. But I'm going to, if you hold your Control key and click on your End key on your keyboard, Control End or Control Home, You can go from top to bottom. So going down to the bottom, you can see how weak trade desk has been. I don't know what happened to this stock, but it really has gotten hammered. So control home. Oh, I have to click on the module itself. Control home takes me right back to the top of the list. Now, of course, you can use this ranking module if you're looking for the biggest percent change. For example, over the past 2 weeks, you can do that. Control home and change this to, I'm sorry, I do it up here, raw relative strength. And you can see that PLTR comes to the top, followed by MSTR and then microchip technology. This column here, this represents the percentage change over that 2-week period. So, getting back to where I was here to begin with, market insight, and then I'm going to flip this into the ranking module. You can see that over the past 2 weeks, the biggest change has been in Bitcoin, the ETF. By the way, there are options on this if you want to play options rather than spending your money on Bitcoin. You can do spreads and so on, which are, you know, your risk going in. Banking, SOXX, this is 2 weeks. And when I go back to relative strength and go to Wilder, it's obvious where the long-term strength has been. Gold, then VIX, consumer staples, silver. Consumer staples, this is defensive. When there are troublesome signs, money flows into the defensive stocks. Now, it's really choppy, though, isn't it? I'm going to end this by going into the XLP category. XLP. And we'll put it up here in the ranking module for 14 weeks. And you can see Philip Morris, one of the first places, and I don't understand why, but that's where money flows. 3.1% dividend yield. I guess they think people are going to smoke more during times of crisis. Kroger Company, which owns grocery stores all over the country. And Dollar General, which fell off a cliff, but it's been working its way higher. So you can see where the money flows during troubled times. Anyway, that's it for this week. I just want to show you how I look and use the sectors, the S&P sectors, to see where the strength and the weakness is. Plus, this market insight is great for just seeing or getting a quick read on where the money is flowing, where the strength and weaknesses are. Thanks for listening. Have a good week, and be careful. Don't do anything crazy with your money, because at any moment this market can either take off or sink, and it's just there's no continuity, in my opinion. Thanks for listening.